I don't know which one you should pick. I'm not saying either one of them is going to go up or anything like that. If I had to pick, I would probably pick Apple. I like Apple as a company. I like Nvidia as a company as well. I just think that, you know, I just like Apple. I like both, to be honest. They're both good. Yeah, sorry. I know I was talking a little bit earlier and the mic was muted. My bad. We're back. There we go. Yeah, we got Morgan Stanley Progressive. Charles Schwab. We've got State Street. GameStop up to 27s. Pretty good day yesterday. All right, let me drink my coffee. I'm excited about my coffee this morning. Oh, man. All right. Sound working? Okay, good. Yeah, we should be good, right? Yeah, United Health also released their earnings. United Health. Let's take a look at both of these. For now, United Health. They dropped earnings this morning. Bank of America just released a little bit early, to be honest. Bank of America dropped a little bit early. Here's Bank of America BAC earnings. They posted. Yeah, so they are just now releasing already. So mine is not showing the EPS. Said revenue of 25.4 billion. They expected 25.2 billion. Net interest income FTE of 13.86. They expected 13.81. Trading revenue came in at 4.68 versus 4.53 expected. So better than expected universally for Bank of America. I'm not sure what their EPS was though. This is what it's showing me here for BAC. So I'm not sure what their actual EPS was, but PNC posted 339 versus 228 or 298, revenue of 5.4 billion versus 5.4 billion expected. So PNC showed better than expected EPS. Revenue was flat. United Health posted 680 EPS. For adjusted EPS, they expected 666, so a little bit better than expected there. Revenue at 98.9 billion. They expected 98.84, so better than expected revenue. Fiscal year EPS view came in at 28 versus 27.59, so better than expected guidance for the fiscal year. FY revenue view came in at they didn't show what they came in there, so yeah, Bank of America posted 83-cent EPS. 83-cent EPS versus 80 cents expected. Good. Yeah, so trade of 8 back. Apex deleted negative trades. That happened yesterday, looks like. Yeah. Good. All right. Oh, man, dude. I'm tired. Yeah, but there's Bank of America. Bank of America's starting to pull back some here. You know, I haven't been confident enough to buy up bank stocks yet, though. Like, bank stocks have been the one group of stocks where I just have not felt good enough in buying those up yet. What's up, T4? So T4, bro, how? I think I asked you this a while back. How do you like UFC 5, bro? You're the same T4 that made UFC 5 content, right? Yes, you are. Have you not been playing UFC 5? Yeah, I'm looking back at your content. It's been a while since you started producing content. Yeah, the only problem... the only problem with UFC 5 is that it's so similar to UFC 4. It looks like you actually have a grappling background, though. No? Do you trade? You trade jiu-jitsu? I'm a spazzy 2-stripe white belt. You know? I'm actually currently banned from using a guillotine. I'm not banned. It's just frowned upon if I use it. You know? Like, I use it so much to get out of trouble that it's limiting my game in jiu-jitsu, and so I'm banned from guillotine. No, I'm not banned. I'm trying. I'm personally trying not to guillotine people, because it's halting my growth in jiu-jitsu. My coach says. I'll basically just I kind of play like a front headlock system where if I have them so afraid of me grabbing their neck that they react, I can get turtle a lot. Like they'll just kind of give me turtle instead of giving me the front headlock position. Like I don't know. I use it to my advantage, but oh damn, what happened to your Twitch account? Hey, what's up, Ivy? Yeah, it's fun. How you doing, John? Appreciate you, my bro. How you doing, chat? We're doing good, man. I'm just hanging out this morning. I didn't get enough sleep. My son's been sleeping in the room with my wife and I, and like he's been having trouble sleeping. So, how do you hold that bladder for that long when you drink that dark, shadowy black coffee? Bro, I just drink coffee, bro. You know, it's just plain old coffee. I just don't put any sugar in it. Coffee's not bad for you if you don't fill it with milk and sugar. Like, filling it with milk and sugar is bad, right? You're still technically fasting if you don't put milk in your coffee too, and fasting's incredibly healthy, right? So you'll go through the entire morning fasting being pretty healthy if you don't put sugar or milk in your coffee. That's the biggest mistake most people make. They fill their coffee with nastiness. I just drink my coffee plain. As for not going to the bathroom, you know, I'm not saying y'all have wimpy bladders, but y'all have wimpy bladders, bro. I don't have to go to the bathroom. Most of the time, I don't have to pee at all, you know. My, top 3 bladders of all time ever in the world. All right, so yeah, banks have reported. A lot of them have posted better than expected results, but have negatively reacted here. Again, here's Bank of America. We also had United Health down. United Health is down to 505s. Or 501s. What else do we have? We had PNC Financial. PNC hasn't really reacted, but they posted earnings as well. They posted 339 versus 298. Revenue of 5.4, which is what was expected at revenue, was 5.41. What else we got? We still got Morgan Stanley, I believe, that we're waiting for in earnings. MS earnings are supposed to drop at 7:30. So we still got about 40 minutes before Morgan Stanley earnings come out. Yeah, I'll do a poll. Retail sales drop at 8:30 today. All right, so retail sales are expected today at minus 0.2%. All right, so we'll do this poll here. I don't know what's better. Lower could be seen as better if we fear. It depends on what the market wants. And I think as we're looking more and more likely for us to cut rates in September, I think as we're looking more and more likely for those rate cuts in September, yeah, I think it depends on what the market wants. It depends on whether the market actually wants those rate cuts or not. Bank of America beat. Bank of America posted 83 cents. Yeah, they did better than expected EPS and revenue. Trading revenue came in at higher than expected as well. So, I mean, they did all right. I know I started the stream up a little bit late this morning. That's all right. Whew. All right, I'm about to put a sweater on. It's cold in here. All right, I'm still in oil. Yeah, I mean, I bought up some stuff yesterday. I still don't know what to do with some of this stuff. Like, we're still waiting on Morgan Stanley numbers. Y'all want to see something? So this is my rate of return. This is my rate of return on TOS. I'm not going to show you guys what it was. But we're doing pretty good. It's not a big number for the last month or two, but it's not bad either. For month to month, you know, like it's actually trending pretty well. Right? This is you had a cumulative rate of return of blank. This is my rate of return from May to July. For a little bit, we almost went into the red portfolio wise, but we're pretty green here. So this is my actual rate of return on TOS. I'll take it. That's pretty good. You know? The market is about to crash. Who's buying the top? You know, again, you don't even know what I bought yesterday. I didn't buy anything around the close to the top. The only thing I bought was Nike. Yesterday I added to Nike. Everything else I'm pretty green. You know? Again, like this is my portfolio right now. Apple, green on Apple. Airbnb, green on Airbnb. AMC, I've been red on it for years. Alibaba, green. Chewy, I'm green. Salesforce, I'm green. CVS, I'm green. Delta Airlines, I'm green. Disney, I'm red. So I bought Disney a couple weeks ago. I'm red. It's all right. Etsy, I'm red. So those are two positions I'm red on. Disney and Etsy. Ford, green. Gold, green. GameStop, green. Google, green. Home Depot, very green. Honeywell, very green. Intel, very green. Coca-Cola, green. MGM, green. MU, I'm red on it. So that's my third position out of all of these that I'm red on. Netflix, I'm green, very green. Nike, I'm red. Nvidia, very green. Pepsi, red. Pfizer, green. Or no, Pfizer, I'm red slightly. I mostly break even though. Palantir, green. PayPal, I'm green. Shopify, I'm green. Snowflake, I am red. SoFi, I'm green. SoundHound, I'm red. T-Bill, I'm green on. Target, I'm green on. Tesla, I'm green on. Tyson Foods, I'm green on. Uber, I'm green on. Walmart, I'm green on. Right? So out of these like 40 positions, what was that? Like 5 red positions, 5 or 6 out of 40 that I'm actually losing money on. And so I added some stuff, and I'm holding stuff in some other, like I've got a couple different like profiles and exchanges here that I invest in. But this isn't terrible, you know. This portfolio is up really nicely, like a really nice percentage, especially if you take into account how much of my equity I'm actually using here. Yeah. Yeah, I mean, Lexi, my advice to you is that, like, okay, you know, they have the healthiest companies in the world, like Apple, right? The strongest companies in the world is what this is, right? 3 months ago, everybody, like right here, everybody was basically talking about how Apple was done down here, and about how Apple was going to get kicked out of the Magnificent Seven, and they were losing their market share overseas, and like all this nonsense, right? What people are missing out on is that nobody really uses Apple overseas. They never have. Apple is mostly a United States company. Most people overseas have Samsung phones, right? But that's not why Apple's strong. Apple's strong because if you're in the United States, especially if you're a young person in the United States, you probably want an Apple. Again, I've got a 15-year-old. I could go buy a Samsung device in the world, and she wouldn't take it. She would rather a 10-year-old iPhone, you know? So Apple has a lot of weight here in the U.S., right? And so Apple, like to have almost everybody here use an Apple device is a powerful thing for a company. And it's one of the reasons Apple's one of the strongest companies in the world, and Apple has been breaking lifetime highs, you know? So, and again, I've been in Apple for I don't know how long. It's certainly not something I recently bought. It's one of my favorite longer-term positions. But, you know, trying to bet against the strongest companies in the world is silly. Like, it's a rookie trader bet, to be honest. Most of these are going to be fine long-term. I'm a Samsung user. Listen, I have a Z Fold. You know, like I have a Z Fold. You know what I mean? Like I like Samsung better. I've always used Samsung. Like I've always used Samsung. You know, but Apple's strong. You know, Apple's also very smart. They make it so that like if you're in a group chat and if you're a young person, say you're a teenager, right, and all your friends have Apple devices, and if you have a Samsung device, you're a different color in the group chat, and it makes you stand out. You don't want a Samsung at all. You know, like young people do not want a Samsung. Apple's very smart with how they market it. Apple's gonna be fine. Yeah, I mean, I'm not saying Apple isn't heavily used other places in the UK, James. What I'm saying is that it doesn't matter that much regarding Apple. Like, Apple's strength doesn't really rely on other countries. And I think with AI and all those capabilities, Apple's going to take off more. Hey, bro, if you got any payouts from prop firms this year? So I'm waiting on one right now. So I'm waiting on one right now. Specifically, like I have thousands of dollars. I have about $3,000 that I'm waiting to withdraw. The main problem is that my business name on Apex, I have to change my business name. And so I'll do that right now. Like my business name on Apex is different. So I'll probably have to just change. Yeah, so my business name is different. So when I've tried to withdraw, what it tells me that I have to do is it tells me that, yeah, I'm gonna just try, what it tells me I have to do is change my my business name. Your first name does not match what you entered in your direct deposit first name. So I'll have to change it here and figure it out with them. But again, like, you got to understand something. I don't really need it. Like, I don't even need to be funded by Apex or anybody, any prop firm. Apex is great. I just don't need it. Like, again, my TOS account's got 100 grand, you know? And I'm not bragging by saying that. I'm saying that so people don't, like, think that I need, people don't think I need to take money out of any of it. Like, you know, I just don't. And so I might just let this profit build up. Yeah, I like Samsung's better as well. And again, I'm not trying to brag. Like, some people get weird if I say that. I'm really not trying to brag. I'm just trying to tell people I don't need to get funded by these funded account programs. Like, I play with them and I try to, you know, and I made enough profit in them to actually take a withdrawal as well. It says that I have to change the first name. So I'll have to figure out how to do that. Totally bragging. I mean, I'm not really bragging. Honestly, it's probably not good for me to say stuff like that online. Like, it might make me a target and people get weird. Like, it's actually, I'm really not trying to brag. I'm trying to tell people that, so people, because, like, one of the biggest criticisms people have towards me sometimes is like, oh, well, you're not taking payouts every month. And it's like, I'm not really trying to, you know, I'm not really trying to get funded like that or take payouts like that. I don't really need to. Like, and I would rather, I'm telling people this for credibility purposes. I would rather somebody be honest with me. Like, most of the people pushing these prop firms do not need to withdraw money from them, right? And so them acting like they're taking all this money out or like they're living off of their withdrawals is not really true, and it's dishonest. I would rather follow somebody that's honest about it, right? And so I'm going to be honest, I don't really need to take money out of these funded account programs. Most people promoting them don't, I would argue. Anyways, Q up to 497s. Yeah, you know. And like I said, I'd rather follow somebody that's honest about it, right? Not somebody that's just trying to sell me stuff. And I think these funded account programs are great. You know, I use them every day. I promote them, you know. I think they're useful for traders that want to save money. YouTube sometimes is kind of like damned if you do, damned if you don't, right? Like, if I tell people I don't need to take money out because I have enough in my TOS account, they say I'm bragging, right? If I don't say that, then they say, oh, well, this dude's not really taking withdrawals, you know? And it's just like, well, no matter what, people are going to get upset about it. And so everybody will be okay, I guess. Yeah, I've thought about getting my Series 7. I really have. I think something I'm still genuinely passionate about in markets is economics and investing. And I think the only reason my parents, my dad is like pressuring me to get one, you know. The only thing is, like, there might be more restrictions on me if I have one versus if I don't have one. Is the only reason I've kind of been hesitant to get my Series 7 is because there might be more restrictions on me. I would get one, but I'm worried it's going to actually cause me to have more restrictions on my, like, what I can do in markets and trading and all that stuff versus what I'm doing now. I'm not sure. I'd have to ask a lawyer. But yeah, that's the only thing that's kind of like, do I really want a Series 7 license right now? Yeah, it's hard for me to tell whether it's just a troll, whether Tolls is just being trollish, or whether he's being legitimate, but he doesn't realize Pawn's a mod here. Yeah. You really actually need to be a financial analyst and know it very well. I mean, what are the benefits of a Series 7, though, I guess is the point, outside of credibility boosting things? Like, I've thought about it. I think, I would like to have it just because it's kind of like, it's credibility and everything. But do I need it? What would I use it for? I'm in Houston. I think if I was like, I would think about becoming a stockbroker if I lived in like New York or somewhere where I could actually monetize that certification better. But yeah, I just don't think I can here. I'm in Houston. Maybe Houston's probably one of the better places to do it outside of New York. But I still don't think, I think the concept of a stockbroker is losing steam to begin with, right? Like, I think stockbrokers, you don't really need them anymore as much as you used to. I think historically you needed a stockbroker because people didn't know how to buy stocks in any significant way, and they were just kind of, nowadays everybody has so much access to the internet, to stock information, to brokerages. You don't really need stockbrokers like you used to. And so you wonder where that entire career path is going, because I couldn't imagine it's going to get bigger. It's probably shrinking. You would need to go to class and study for a while, like a year, and do it and pass the test. I could probably pass the test in a week. Yeah. I passed my real estate license. I decided I wanted my real estate license. Now I'm bragging, just to clarify, right? Earlier I wasn't bragging. Now I'm bragging a little bit. I passed my real estate license. I decided I wanted my real estate license, and within a week and a half I had it. Passed the exam first time I took it. Although I'll probably add, that's just the real estate licensing exam. I'm sure that's much easier than the Series 7 license exam. Dude, I would pass that test in like a week and a half, bro. I'm telling you. I would pass that test so fast. So fast. I'm actually a really good test taker, I'm a really good test taker. Oh, I would pass that test in like a week and a half. I'll bet you anything you're not passing in a week. No, give me. All right, if we're gonna get a gentleman's bet going on here, let's make it somewhat reasonable. Give me 2 weeks, 2.5 weeks. I'll pass that exam. Let me not do it during earnings season as well, right? Earnings season's coming up. I'm gonna have to be streaming a lot, because we have a bunch of earnings coming out now. Give me let's set a hard date. It's not that it changes in 2 weeks, right? I have to look up how can I even prove, so the question is, how can I take this exam, right? Passing the test is fine, but what other extracurriculars do I need to get it? So you would have to, so many candidates complete prerequisite courses. You studied material specifically designed for the Series 7. So I'm going to have to be sponsored by a firm and all this stuff. That's the only thing. I believe I could pass the test and exam. But I have to pass the SIE exam before taking the Series 7, which covers fundamental topics. So are we talking about the Series 7 or are we talking about the a different one? I'm not backtracking. What I'm saying is, like, look, I think if I had a week to study, I could pass that exam 100%. Without question. I could pass that exam. First try. But, and if it was as easy as just taking the exam, I would do it, right? But what I'm reading here is I got to do a lot of other stuff outside of study for an exam to get this certification. I would have to get sponsored by a FINRA member firm. I would have to do a bunch of other things outside of just studying for the exam. That's the problem. Is like there's a lot more added stuff I would have to do. But yeah, definitely I could pass this. Well, first try. Yeah, you gotta pass the SIE first. They're not just gonna let me take the Series 7 exam, unfortunately. Or I would make that bet with you guys. Any idea on what companies from the Russell would you invest in? I'm not really a big small cap person. I'm not really interested in small cap stocks, to be completely honest, though. I have no idea. I know the Russell's been moving a lot lately with all the craziness going on in small cap land. I would just look up, Russell stocks. I'm just not investing in it personally. I just don't want to buy the Russell. All this easy talk. I mean, I'm not really backtracking. I think I would pass that exam. If you gave me a week to study, I would pass it 100%. Without question, I would pass that exam. If you gave me a week to study, I could pass any freaking exam. I could pass the bar exam in a week. Maybe not the bar, but I could pass the Series 7 for sure. But it's not that easy as taking the Series 7 in a week, right? Like, there's a lot of other stuff I would have to do. I would have to take the SIE exam. I would have to get a sponsored broker. There would just be a lot of work. And so I'd have to talk to my lawyer and make sure that I could continue my business as it is. But if there's a way for me to just take the Series 7 exam in a week, I'll do it. But what kind of prop firm is that, Bullseye? You need $10,000 and you need to get licensed and pass 2 exams just to be in the prop firm? That sounds silly, though. United Health posted 680 EPS, revenue of 98.9 billion, fiscal year EPS of 28 versus 27. So United Health should be moving up. They had good earnings, had good guidance numbers, but for whatever reason, United Health is pulling back some. They're not pulling back enough for me to want to buy it up. They're at 511s. They're pretty much flat on the day, but with good EPS, good revenue, and good guidance, you would assume United Health would be pushing up some here, which is strange. Like, here's United Health. Weird. They're mostly just flat. I mean, it's not backtracking to say, hey, I could pass the test, but like the conditions for me to even take the test are too difficult for me to want to do just for a bet. Like, I don't care enough about a bet. Like, let me research it, and if a Series 7 license is something that I genuinely want to get, then maybe we can make that bet. But I would have to research it. I'm not just gonna take it just for a bet if it requires thousands of dollars and a lot more work outside of studying for an exam. If it was just the exam, I would take it, and then I would have it passed, and then I would do whatever else I needed to do later. But it's not that easy. So it's not backtracking. It's just not that easy to take the exam, unfortunately. Yeah, but Yeah, so if 65 to 70% of test takers pass it first try, then I'm passing it first try, you know. Oh, I could definitely pass this, dude. I asked OpenAI to give me a mock question. An investor buys 100 shares of XYZ at $50 a share. A year later, XYZ Corporation declares a 2-for-1 stock split, meaning he breaks it up into it'll now be $100 a share, and he'll own 50 shares. What is the investor's position in XYZ after the stock split, and what's the new cost basis per share? Yeah. So it's going to be $50 a share, 200 shares at $50 a share. It's going to be A. Or no, I'm sorry. It's going to be B, $25 a share, 200 shares at $25. I thought it was, yeah. These are easy questions, though. Palantir got downgraded. I'm in Palantir. Yeah, I've seen T3. T3 is a little bit different of a prop firm. Palantir is down. I'm in Palantir right now. I added to this. I'm going to take a little bit of profit on Palantir just because I'm already in it. I've been in it. Yeah, we're going to take a little bit off just to lock in some profit here. We'll keep most of it. We're still in GameStop as well. GameStop's rising this morning also. Nike's the one where I'm in pretty heavy. I'm not super heavy on Nike. Like, it's nothing super influential over my portfolio. But, let's see if Nike bounces back. No, I got it right. I corrected it. I was looking at it. They didn't. SoFi Technologies. Yeah, I'm looking at SoFi. I think I'm in SoFi also. SoFi at 744s. I am in SoFi. My average price is roughly flat. I don't know when I bought SoFi. All you need for credibility is your CMT. I'm not a big fan of market technician certifications. I'm not saying they're not good, right? I'm just not a big fan of them. I think that certified market technicians, I'm not a big fan of those certifications. Yeah, I mean, listen, creative. Again, I'm not going to keep going back and forth. I don't know if that's necessarily healthy. What I will say is that I take exams very well, very well. I also have a very good memory, and this is not me. Like, look, I know I joke around a lot with sarcasm and say I'm the top 3 greatest and all this different stuff, right? And it kind of just trolling you guys. One thing that I'm serious about is that I take tests very well. Like, I take exams very well. I can memorize things very quickly, and I can cram things very fast, and I can understand things, basic things, well enough to pass tests. At least I have in my life historically. I'm not saying I'm the best, definitely top 3 ever of all time, and I could pass that test in about a week if you gave me a study material for it, for sure. Give me a day or two. Let me see if it's something I would be interested in doing. And if it is, maybe I'll take it. But if it's going to hurt me in my job at all, where I have to be a little bit more careful about what I do, Might need to do a sell a course. Yeah. I'm assuming you mean chartered market tuition or technician. Again, I'm not a big fan of the look. If you research this, right? If you look at research like CMTs, right? CMT is mostly like a technical certification, right? Like, so CMTs are technical certs. So yeah, United Health. We're waiting on Morgan Stanley is the next one to drop earnings. Morgan Stanley is expected at 165 a share, 1423 billion revenue. So Morgan Stanley's supposed to drop in about 6 minutes. So we'll see what Morgan Stanley looks like. I'll put them up on screen. MS. It's probably the biggest company to drop earnings this morning is maybe Morgan Stanley. Could be also, I mean, you could maybe Bank of America. But I don't know. It says like I'm prohibited of making specific recommendations, which I don't really do anyway. I would have to get approval from my firm, disclosure requirements, FINRA regulations. Yeah, I'm not getting this. Yeah, so again, the problem is like I would have to be sponsored by a firm if I got my Series 7, and they're gonna restrict my business too much for me to want to get this. To be honest, unfortunately. Yeah. But no, regarding CMT, so if you look at if you research CMTs, it's mostly a technical certification, and a lot of people are going to look at you lesser for it. If you go up in a job interview and you're like, hey, depending on which one it is, hey, I got my CMT certification, it might actually hurt you more than it helps you, right? Because that's a purely technical degree, and so it's the only people really benefiting from the CMT designation are the people offering the degree to begin with, right? I don't know if it's necessarily helping anybody that gets it. Series 7 is completely different, but the chartered market technician, I don't know. I'm not a big fan of that certification. I don't think it really does anything to help the person that gets it. And from what I've heard, people that actually work in finance, I know a couple people that actually work in finance in that way. As like stockbrokers and stuff like that. From what I understand, if somebody puts that on their resume, it's actually going to hurt them. The person giving them the job's going to look at them like, hey, you got talked into getting this, basically. Again, I don't know for sure. It's not something I have, but yeah. Yeah, I'm just going to pass on it. Again, there's no way for me to really take it where it benefits me, and I'm not just going to take it just for a bet with some, with a couple people in chat. It's just not worth it, chat. It's not worth the time and energy. Again, it's earnings season right now, and so I have to focus on earnings. Earnings season's coming out. Morgan Stanley about to drop earnings in about 3 minutes. We could find you a duplicate 7 practice exam to take today. Yeah, but then I wouldn't study at all for it. I'm not even trying to say I would be able to pass it without studying. Nobody would be able to. But if you give me a week, that's a completely different thing to study. And again, no offense, it's not worth it. I'm not going to spend a week studying for a certification that I don't need just to win a bet. Sorry, bro. Yeah, I got you, T4. Yeah, if there's a dynamic of it that I'm missing, Zeus, let me know, brother. I'm definitely open to hearing about it. last earnings season was fun, so looking forward to this one. Yeah, this one's interesting, man. We got a lot of big earnings, too. A lot of stuff's really extended on the upside. NVIDIA earnings are still our largest stream we've ever done. Or maybe it wasn't. I don't know if NVIDIA earnings were the biggest stream we've ever done. One of them, we ended up getting 14,000 concurrent viewers for NVIDIA earnings. And then I think actually a Jerome Powell stream broke that record, but I'm not 100% sure. Yeah, I mean, it's all good. Yeah. Yeah, it doesn't matter too much. Looks like NVIDIA derivatives have a few reverse splits. Yeah, so I'm looking at, do I still have it logged in? Let's get logged in here. Okay, cool, I'm still in. Again, I'm pretty happy with my, my accuracy. Like, look, again, I showed people this earlier. This is my percentage returns, just from May to July. So since I opened up this account with Schwab, originally I had TD Ameritrade, but now that I have Schwab, this is my rate of return since May. I'll take it. It's actually pretty solid. It really is pretty solid. You know, here is my, if you guys want to see. I'm not going to show you how much I make, but sorry, I'm trying to. From May to July, we have grown 5-digit amount, or 4 digits. So I'll take it. Retail sales for gold. Yeah, we'll see about retail sales. Again, retail sales expected at minus 0.2%. Oh, we did have Morgan Stanley drop their earnings here, chat. Morgan Stanley bouncing up some. They posted 182 EPS versus 165 expected. Revenue of 15 billion. They expected 14.3 billion expected. Here's Morgan Stanley's numbers. Morgan Stanley actually reacting positively to this. Just broke 108 highs. Still moving up. What's up, Daniel? Make sure I'm transferring this right. There we go. All right, cool. Yeah, SoFi actually had a really nice bounce back this month in July. We're now technically green on it, but we're mostly flat. Let's see how Morgan Stanley reacts. Anything else big today earnings wise? So we had Morgan Stanley. Schwab reports at 8 a.m. So we got 30 minutes or so for Schwab. We got State Street supposed to drop theirs in about 7 minutes. PNC Financial's already out. Schwab. Progressive is supposed to drop their numbers too. Still got Morgan Stanley out. A couple other ones too. Looks like PNC. Yeah. What else do we have today? So again, we're right at the start of earnings season. So this evening we've got Interactive Brokers, JB Hunt, Hancock Whitney, a couple other companies. And then Wednesday, we've got ASML, Johnson & Johnson, Ally tomorrow morning. So tomorrow morning, we got, again, ASML, Johnson & Johnson, Ally. Tomorrow evening, we got United Airlines, Alcoa, Kinder Morgan, Discover. Thursday, pre-market, we've got Domino's, Nokia, Taiwan Semiconductors, TSM's probably the biggest one then. Netflix, Thursday evening after the close. So, and then Friday we got bank earnings. We got Amex, Halliburton, a couple other ones too. The big boys are next week. And then in terms of yeah, we got some Fed members speaking all week. Next week's busy with jobless claims, GDP, durable goods, PCE data. So next Friday, July 26th, we've got PCE, which is very important right now, especially with rate cut expectations. Look at Morgan Stanley pulling back here. Yeah, so again, I'll put a timer up. Weird. Look how accurate this was. This is basically exactly right. The timer here for retail sales. There we go. Look at Morgan Stanley fall all the way down here. So again, I'm not confident enough to buy banks right now. That's one of the sectors of I'm just not super confident in buying up right now, unfortunately. It's got to be more than I haven't done yet. I'm trying to see. All right, so I gotta look at Quant Tower here. Let me check Quant Tower. Let me open up Quant Tower. We'll watch Morgan Stanley. The SPY is still pretty light in terms of economic data. Looks interesting in lower rates. Even FMCC and FINMA called a pump. Brought very rare behavior. For what? What's rare? Morgan Stanley at 104s. Q still sitting slightly green here. Again, I don't know how much retail sales are going to affect everything. The question is, does economic growth help or hurt this current market? Historically and conventionally, economic growth is a good thing, of course, for markets. We want a thriving economy. Right now, though, the question is, do we still want a thriving economy, or does the market fear economic growth because of inflation, right? Is inflation so bad right now that the market fears economic growth, or is economic growth going to be seen as an optimistic thing because rate cut pressures? You know, if we feared inflation in a big heavy amount, then what the market's going to want is less economic growth, lower retail sales numbers. And retail sales are already expected to show up at a negative at minus 0.2%. So the question is, what does the market want? What does the market fear? Is the market dovish, meaning they want lower interest rates? If they want lower interest rates, then what's going to make it more likely that they do? So a lower retail sales number is going to make it more likely the Fed is going to cut rates, right? And so if the market wants rate cuts, it essentially wants lower retail sales, because that signals economic weakness and more probability that we're going to cut rates. If the market fears inflation, you know, they also might want lower retail sales numbers, right? But if the market fears economic weakness, a stronger economy is better, and higher retail sales number are going to be seen as better. So that's the kind of nuance of this report here with retail sales. And again, I don't really know what the market's going to want in that situation. I genuinely don't know. We'll have to wait and see what we get. Let me put some of this up. There we go. Trying to see where these accounts are. Okay, so 30. There's 38. Okay. Oh, dude, I gotta get my wallet to activate this funded account program. It's all right. SoFi at 745. So let me see. GameStop still trying. So looking at our votes here, 50% think they retail sales report comes in higher than expected. 39% think lower. 11% say I don't know. I'm also looking at Twitter right now. Again, so we had a bunch of bank earnings come out. Bank of America CFO says they remain well positioned with significant excess capital compared to regulatory minimums, according to their conference call. So again, we're kind of detailing what's going on in their conference call. Bank of America basically says that they're well positioned with lots of excess capital compared to regulatory minimums in their conference call. So Bank of America, let's see what they're doing. Bank of America having a really strong reaction to earnings. They're up to 42.80s here, chat. 42.80s. All right. Yeah, so Bank of America up there, SPY up there. The Q at 497s. If I look at the NASDAQ here. NASDAQ over 20K. What do you think, John, about what? Then. Where's Bank of America? Where's the trend here? Let me take a look. So Bank of America's had a really strong trend this year. I just don't trust it enough with rates being high right now and them holding rates here. I don't know what they're going to do regarding banks. Yeah, so I'm looking up some other stuff. Schwab just reported numbers. So Charles Schwab did report numbers. State Street is also out as well. So again, Schwab just reported here. Schwab reacting negatively here. Look at their drop. So Schwab all the way down to 73s. If we look at State Street, here's State Street. State Street actually gapping up a little bit, but here's Schwab. We'll put those numbers up in chat. What do you think? Higher or lower retail sales? I really don't know. I think I kind of think the market wants higher retail sales right now, but I don't think it's a really predictable. I don't think it's a really predictable thing. I don't think anybody can really predict what it is. So again, there's Schwab. Schwab numbers are showing up right there. State Street also reported 215 versus 203, revenue of 3.19 versus 3.15. So State Street posted better than expected results here. We'll put those up in chat as well. Here's State Street. Again, though, what's up, Scruff? We do have some positive, again, Bank of America CEO says they're well positioned with lots of excess capital, basically. So that's good. Again, retail sales. All right, so retail sales drop at 8:30. They're expected at negative 0.2%. I don't know. Does this release come in higher or lower than expected? Let me know what you guys think. Again, this drops in about 45 minutes. Whatever you all do, never invest into Europe. Yeah, I mean, I mostly just invest in the U.S. stuff. You got other people that invest in all these other markets internationally. I've just never been a big fan of that. I'm a big believer. I'm not sure if it was Warren Buffett or whomever said it, but they say invest in what you know. And I think that's very true. You have to invest in what you understand. And the problem with investing overseas is you just don't understand. Unless that's your market. If that's your market, there might be some good investments to make. But, investing in what you know is important. Yeah. All right, NASDAQ trying to push. Yeah, we'll try to day trade some here. We have this funded account. I think we made a little bit in our actual funded account yesterday. Yeah, so we made about $300 yesterday. I'll take that. Let's try to day trade some here. Put 2 charts up. Banks. We have this choppy range, though. I don't know whether I want to short the top or cover the bottom. What do you guys think? Do you think T3 is legit? I've never used them. From my understanding about T3 is that they're legit, but I also think that it doesn't get you around the PDT rule, right? So I think investing with them, if it's in stocks, it doesn't get you around the PDT rule. So you can create an account with them, but if you have less than 25K, you're not going to be able to actively day trade with a margin account. You're not going to be able to day trade. And so that's the only thing with me about T3 is that it doesn't get me around the PDT rule. And so for you, it's not going to get you around the PDT rule. If you deposit 5K, you're going to be severely restricted. You're not going to be able to day trade, Yeah. No. Then says, do you think the Illuminati is real? No, not really. They have no PDT rule? Not from my understanding. Bullseye. Again, I've spoken with them, done some consultations with them. This was years and years ago, though. And I remember what they told me was that you're still restricted by the PDT rule. If you got less than 25K, you can't day trade with a margin account. So unless you deposit over 25K with them, But again, I might be wrong. I don't know. I might be wrong. I really don't know. I haven't talked to them or reached out with them in years. Ton of people trade gold on there. I can see why the swings in gold are crazy. It's not Forex, but it does trade on Forex too, I think. Yeah. Yeah, no, I mean, I'm reading this right now. It says, as a professional prop trader, the pattern day trading rule does not apply. And so, hey, if that's the truth, then, that's great. But this says required qualifications are bachelor's degree in finance, proven track record, strong understanding of trading, proficient at utilizing trading platforms and tools, excellent analytical skills, demonstrated ability, strong. You also have to take the SIE, the Securities Industry Essential Exam, and Series 5-7 Securities Trader Representative Exam. So there's a lot of stuff you got to do with them. again, for me, it doesn't make sense for me to get any of these licenses. All right, guys, we got 40 minutes. Okay, gotcha. Is it Peter Lynch? Okay, that makes sense. $30-to-1 leverage. Yeah, but I don't think they're gonna let you get started with like $300 or something like that, where you would, you know, turn $300 into 30,000. Or no, not 30,000. 300 times 30 would be 9,000. You know, so they're gonna need thousands, I'm pretty sure, from you. I've talked to them before. It was a long time ago, and I can't remember what they do. But yeah. They want 10K. Yeah, for sure. That's what I said. I remember they wanted something. TNA? What do you mean about TNA RKD? Do you mean the ETF TNA? Small cap? Yeah, I'm not really a big fan of small caps. 10K minimum. Yeah, I figured it was something like that. Yeah, I figured it was something like that. GameStop at 27.20, chat. Trying to move up. Is higher leverage good? It can be. It can also be bad. It depends on how you look at it. Yeah, GameStop's still moving up. Anything else? I'm looking at the queue. How are you guys doing? You guys red or green today? What do you think about ETH ETF prelim approval by the SEC? Good for alts? I don't know if it's good for altcoins. I would say it's good for crypto in general. And I think, yeah, Bitcoin looking much better. Back up to 64K. One of the biggest things, like people always say Bitcoin is done every time it starts to pull back. You know, but I think that's a silly mindset to have. Yeah, so again, Pawn went ahead and timed Creative Life out for the day. And again, I think it's probably the right move. The problem with Creative is that he seems to just sit around waiting to disagree, right? So he's one of those people that kind of just sits around waiting to disagree with me and then argues. So, like, no matter what I say, he's going the opposite way. You know what I mean? And so it's fine if sometimes you disagree. It's a different thing if you're intentionally just trying to be difficult, right? Which is almost certainly what it is. We've had the same person that's kind of back and forth for years. It's probably that guy. It's probably the same guy. Cheers to him, you know. Sit down and think about what you've done. Good morning, Green. So far today, trading small, though. Hey, nice, Jay. What do you think about the gold? The gold? Where's gold at? Gold was breaking highs yesterday. Still pretty close to highs. Very strong day today. Gold is flying up. Now that we talk about it here, look at this. Gold has been moving up. Gold up to 24.48. Is that the lifetime highs? No, 24.54 is the lifetime highs right here. Very close to lifetime highs on gold, though. You can kind of see this is the lifetime highs on gold. So gold is very close. Very close. What's up, Justin? Crushed, Seek, LSK, and Riot. Yeah, I mean, Mara, Riot, they're all doing really well right now just because of Bitcoin's strength. And Bitcoin pulled back some. Mara broke over this big long range that it's had all year. Over 24s. When you are in a long position and it rockets, do you sell half? Do you sell CC and sell... What do you mean, CC? Trying to work on my strategy. I'm not going to tell you what to do. I have no idea what you should do, Justin. What I will say is that it varies depending on the trade, right? It's not always the same thing. It depends on what my sizing is, right? My sizing matters the most in that situation because I need to know how much I'm going to sell, how much I'm going to buy, like what the sizing I have is. So if I have like 100 plus shares of something, then I'll usually take like a third, maybe 40% off of the position. If I have a much smaller shares position, then I'm usually much more careful about how much I take off. But it depends on how big of a trade I am. It also depends on the history of the stock. You know, if the stock is known for rocketing up, I might let it work a little bit. If I think that the stock is like a good legacy company that's been around a long time, that's healthy, that will probably go up long term, I might take less off and just let more sit on it. So it really depends on the situation. I don't ever sell covered calls or anything like that. No, I'm not an options guy at all. All right. Thanks so much, Chad. Yeah, all good, Justin. I was at 40% on both, but I do like Riot, CLSK. I'm not super familiar with CLSK. The Clean Spark. Describe this company for me. I see it. The trend doesn't look terrible. Like the daily chart doesn't look horrible. But it also has been very, very, very sideways since February. So that's the only issue I have with it. If we look at CLSK here, what I mean by this, Chad, is like if I look up a yearly chart, we've basically been flat. It's a strong chart on the year. It's up on the year, on the last 52 weeks, that is, right? But the problem with it is more so that it's been completely sideways for months and months now. Like, look at this. Here's the bottom of the range. Here's the top of the range, you know. So that's the only part that I'm hesitant with Clean Spark. I don't know enough about it as a company, though. Why not just stick a trailing stop loss on it? Because that market makers know how to manipulate those type of stops, in my opinion. But everybody's different. Tesla number 4, coin number 5, where Tesla holds more Bitcoin than coin. I gotta check this out. Maybe. CLSK number 9 in Bitcoin holdings. What else do they do outside of hold crypto, though? Are they like MicroStrategy in that regard, where they're just kind of like a holding company? MicroStrategy up to over 1,600 still. I don't think the market has moved much in the past during the state retail sales data release, but you never know. Let's just stay peeled. Yeah, for sure. I mean, we might move. We might not. We'll see. Well, I'm newish to them, but I don't expect them to recover to their previous prices necessarily. As you can see, we'd be there and still dependent on the current economy. Still holding gold, though, too. We have a ton of recession indicators flashing, so I'd rather have gold. Yeah, the problem with gold, though, is that gold is breaking highs recently. You know, and again, I've said this once, I'll say it again. Gold can downtrend for years and years and years. That's the only risk. Like, look at this downtrend. Right now, to be fair, this happened after the crazy run of 08, right? When 08 happened, everybody hedged against gold. You know, so gold flew up to almost 2,000. The problem is that gold didn't break 2,000 again. You know, it hit almost 2,000. It got up to 1920s back in 2011. Gold didn't get anywhere near that until 2020, right? So this was almost a decade long. It took almost a decade for gold to get back up to these levels is the problem. I'm going to short this. It's probably a little risky of a short, but that's okay. We've already made a little bit of money in this account. And so I think that's the problem. That's the risk with gold, is that gold long-term is very safe. Short term, though, anything can happen, and gold is also pushing up towards highs. And so I think the extension on gold is up there already. But gold is a good recession inflation, hedge. And so I do think people gravitate towards it. But the question is it up too much recently to be safe short term? And I don't know. I don't know if it's up too much or not. What do you guys think? Is gold? That's a good question. Is gold extended on the upside short term? All right, so we're losing here on this trade. I could add one more position to it. I guess we'll try. See if we can retrace back down. Gold mostly short-term follows macro markets, but there's also risk. Yeah, we got to cut that. So we lost $100 bucks or so in this funded account. Market seems very choppy, though. S&P is pretty flat. I think Trade Evade's back. Tesla to 280 this week. Where's Tesla? I haven't even looked at Tesla a lot this morning. Yeah, Tesla at 250s. Small cap slow, red day for Tesla again. Here's a question, chat. Is gold extended on the upside short term? Or does it have more room to run? Genuine question, Chad. Genuine question. Is gold extended on the upside short term, or does it have more room to run? Let me know what you guys think. Basically, is gold up too much? It's been breaking lifetime highs. Again, if we put up a 10-day chart, here's 10 days of gold. Gold was at 2360s. It's all the way up to 2450s now, so it's been moving up a lot. Yeah, so it has more room, Ken says. I see a flag pattern emerging on Tesla down 230 to 220. Yeah, I mean, the question is, what are the recession indicators? I hear a lot of people talking about a recession, depression. Again, I disagree. I don't think we have very many recession signals. The only one that I hear people say is inflation, but inflation's the opposite of recession. Inflation is up too much. I believe it's overbought. I think it has room to run. It has more room to run, people say. All right, well, I like gold long term. I'm hesitant short term, though. A little bit more, but too much. Yeah, I think it might have a little bit more room, but not that much. And I think there's risks if you keep holding it. So. We'll be up at 27 minutes. Yeah, so that's a good question. So most people think that it's got a little bit more room, maybe. We'll do another question here, and I think it's a good question. In what ways does the current economy signal a coming recession? It's a really good question, too. You hear a lot of people say a recession is imminent, but I don't know very many ways in which we look like we're going to hit a recession. The only real way people argue is like, oh, real estate. But real estate needs to pull back. Like, real estate has to come back down. It's not something in which the market can handle. Like, the market doesn't need another strong... It's not like the market needs super strength in real estate right now. Like, the real estate market needs to correct. It's been up way too much over the past 5 years. The mortgage market's, thrived in 2021. Real estate prices surged in 2021. It was certainly a seller's market. And, the problem is that it's not sustainable. The reality is those markets, including the automobile market, the car market, need to correct a little bit. Like used cars, people were selling their used cars with 100,000 miles for 20, 30 grand, right? Like those markets are obscenely high and they need to correct some. But outside of that, we don't really have that many recession signals, in my opinion. Like, we don't have that many recession signs. JOLTS was strong. Unemployment's still at 4.1%. The labor market seems stronger. Yeah, the inverted yield curve certainly is one. Well, jobless claims is a weekly report. I'm assuming you mean unemployment, which is at 4.1%, which is not crazy high. Unemployment is less than 4.5%. It's at 4.1 right now. Good question. I like to know what these recession indicators people keep talking about are. Yeah, for sure. I'd like to know too. I'm genuinely curious. Like, I'd like to know where people think we're about to hit a recession. The only thing I can really gather is that they're in real estate and they want the market to, or they want interest rates to come down. And so they're going to act like they're going to act like they need interest rates to come back down because they want interest rates to come back down, right? But I don't think that's necessary. I think really, interest rates aren't objectively high to begin with right now. Interest rates are at 7%. It's certainly not what it was in 2019, 2020, but it's also not like obscenely high, like average wise at least. And so I don't know. I don't see it. My girlfriend is a realtor, and last week alone, 5 deposits. We are talking $500,000 homes. I honestly can't believe it. Yeah, man, the market's been crazy. But again, that shows less signs of a recession. All right. So again, we got a little correction here. NASDAQ's right at the top of the range. We still got 25 minutes plus. Dollar Tree closing stores, Big Lots closing stores. Yeah, but those things are not because of a recession, CWC. Right, and I think anybody looking at that objectively understands that Dollar Tree closing, Big Lots closing, so forth and so on has nothing to do with a recession. Right, it truly has nothing to do with the recession. It's very obvious why Dollar Tree, stuff like that are closing. And again, it has nothing to do with the recession. Those stores closing. I told people those stores would be closing years ago, right? The reason those stores are closing is because everybody can order the same thing that's in those stores online for cheaper, right? Like, retail stores in general are losing interest. Like, nobody needs to go to those stores anymore. The only people that are still holding on to those stores are the older population. And over time, they're going to stop going as well, right? And so, again, nobody needs to go to those stores anymore. And we're going to continue to see that regardless of the economic state, where we see Dollar Tree closing. Any retail store like that, nobody goes there. Nobody ever shops there. Amazon and mail order shipping products is destroying those industries, right? And that has nothing to do with whether we're in a recession or not. Genuinely nothing to do with whether we're in a recession. Just stand back and look at it from the perspective of someone owning that business. Right, but in business, you have to evolve, right? Like, anybody that recently opened up a Dollar Tree store is making a bad financial decision to begin with. Like, we can't, okay, the easiest way to put it is like when the automobile came out, a lot of people in the carriage industry lost their jobs, right? Like, we can't just try to protect those people. We have to let technology evolve, and that includes mail order shipping. That includes people buying things online as opposed to in the actual physical retail stores. And over time, you're going to see more and more of those stores close because people just don't need to go there anymore, right? And it doesn't have anything to do with economics, or it doesn't have anything to do with the current economic strength or weakness. It has more to do with evolution of technology. People buy things online now. They probably get things cheaper online now than they did at those stores. Those stores used to be cheap places to go. Now those stores are so desperate to make money that they're hiking the prices of their stuff there. So nobody really needs to go there. You can get way more things online shipped to you same day a lot of the time versus driving to these stores and just nobody goes there anymore, unfortunately. No, I get you. I get you might be agreeing with me, Nick. What I'm saying though is that somebody owning that business, again, the truth remains. If you're starting a business like that, that's a bad financial decision. Yeah, did Mt. Gox pay people? I know that one of the reasons Bitcoin pulled back is because they were assuming a lot of selling pressure was going to show up from Mt. Gox payments. Yeah, but we've been in debt for the last 15 years, CWC. Yeah, I mean, again, I disagree, CWC. We're certainly not in a recession. We have positive GDP. Unemployment's at around 4%. Labor market's still okay. I'm not saying things are perfect right now, but there's a difference between things are not good and we're in a recession. The reality is most people are unhappy in having to work those jobs because prices are so freaking high. What you're arguing for is actually the opposite of low rates, CWC, right? So CWC keeps referencing people are having to work all these jobs. The reason people are working these jobs, guys, is because prices have gone up so much in the last 5 years that they can't afford things anymore. And so the opposite of what we need is lowering rates. Lowering rates is going to exacerbate that problem. It's going to make prices higher. The consequence of lowering rates, guys, is higher freaking prices. And so if we lower rates more right now, early, especially too prematurely, the consequence is that people are going to have to get more work. They're going to have to work more jobs just to be able to afford things because the direct correlation is lower rates equals higher prices. All right. And so, again, a lot of people don't realize this, but lowering rates is going to make the problem worse economics wise. It's going to make the problem worse. It's not going to help the problem. The only people it's going to benefit are real estate professionals. Right. And they're the ones pushing it like we really need it. They need rates to be low. Not true. We don't need low rates. We need lower prices. And the way we get lower prices is by keeping interest rates as high as we can for as long as we possibly can. If we don't, we're making a massive mistake, a huge mistake. So I hope you guys understand, lowering rates is going to make that problem worse. And it's not a recession. It's the opposite of that. It's too strong of a labor market to where prices have gone up too much. Yeah, I mean, look, we can agree to disagree, CWC. We're not in a recession right now, but things aren't perfect either. Prices are high. The only way we can really handle high prices is by keeping interest rates high. That'll push prices down, and that's what we need versus lowering prices to pander to real estate. It just doesn't make sense, No, I'm not saying you did, CWC. I'm just saying rates need to stay high. That's my argument for everybody there. Rates need to stay high. Because really right now we're not in a period where we're printing money. We're not doing QE right now. We're actually doing quantitative tightening. So we're actually doing the opposite of QE and money printing in that regard, where we're reducing our balance sheet and lowering holdings there, which takes liquidity away from those markets and forces banks to keep interest rates high. It's important that we keep them high too. So again, I am day trading here. I'm in the S&P. Right now, we already took some profit here just to show you this trade. We're up 71. I'm gonna go ahead and take another piece off, lock that in. Gold, yeah, gold's still up there. SPY's still trying. We're still waiting here. Retail sales data drops pretty soon. Southwest Airline teams up with Amazon for exclusive deals. State Street, Schwab all out with earnings. Yeah, I think what happens, again, I've said this before, I say it again. And again, I'm not disagreeing with anybody here. It's all love. We can always speculate and go back and forth. As long as you're respectful about it, it's all good. It's all love here. We can have these conversations, and I think these conversations are important. But, all right, I think a lot of people say, hey, things aren't great right now. We must be in a recession, right? A lot of time there's a lot of marketing, and especially during election years, one side tries to make the other side look like it's the worst it could ever possibly be right now, right? And that can be really, really persuasive, especially if you lean one side politically, right? And then the other side is going to try to make you think it's the greatest it's ever been right now. Typically that's the side that's really pushing for rate cuts. trying to artificially inflate the economy, if that makes sense, right? The truth is somewhere in the middle, right? It's certainly not the worst it could ever be. We're not in a recession right now, but things aren't great either, and prices are freaking obscenely high, and things aren't rosy either in that way. But because of that, you get a lot of people saying, like, we're in a recession when we're really not. Like, we have GDP growth, unemployment's still low, the labor market's still somewhat strong. The real reason people are unhappy is because prices are simply too high, and they've gone up too much over the past 5 years to where people are unhappy because of that, right? People might be having to work multiple jobs because they have to be able to afford these ridiculously high prices. And again, the only way we can really solve those high prices is by keeping interest rates high for as long as possible. But again, I said it yesterday when Powell spoke, the Fed is getting so much pressure right now. The Fed is getting pressure to cut rates and to stimulate the economy that way because they want a thriving economy for the election, right? And they can say that they're not, and maybe they're telling the truth. I don't know. I'm not going to hold my breath for that. I think they're getting political pressure to stimulate the economy through rate cuts, and I think that's the worst thing we could do right now. The worst thing we can do. That's going to make prices worse. It's going to make prices higher, and it's just going to cause economic struggles, in my opinion. But again, it doesn't mean we're in a recession either. You know, a recession is a very specific definition that we're just not in right now. But I think that, honestly, I think if we hit a recession, it wouldn't be the worst thing. You know, and I know that might be a little controversial, but you know, prices typically correct the most when we're in recessions, you know, and it generally occurs because we're keeping rates high for long. And again, I'm not necessarily against that. I think real estate can handle it. I think a lot of industries need that correction, especially like car prices. Car prices are obscene right now, are obscene. So yeah, I think that's kind of where I'm at with everything. But again, I might be wrong. Maybe I'm wrong. And if you think I'm wrong, I'm open to hear it. As long as you're respectful, it's all good. If we're not in a recession, then why is Congress and banks begging for rate cuts? Because it benefits them to cut rates. Congress, again, typically politically, right? They want rate cuts because rate cuts stimulate the economy and make the economy look stronger. And during election years, that's a really good thing to have, is a strong economy, right? And so if you're a politician and you want to get elected, right? What do you want? You want a strong economy, right? And so you want rate cuts regardless of what it's going to do because it'll make the economy look strong, right? 100%. That doesn't mean we're in a recession. Again, that has nothing to do. I mean, again, it just doesn't mean we're in a recession. The bank one is obvious, right? The reason banks want to cut rates is because banks benefit more when rates are low. If you're a lender, you know, again, let's use mortgage brokers as an example, right? I'll tell you. So in 2021, mortgage brokers made so much money in 2021. After the Fed stepped in after 2020 and the pandemic and they lowered interest rates to consumers, mortgage brokers made a lot of money, right? In 2021, 2022, their business surged. They made so much money. Then inflation spiked and the Fed took the other approach where the Fed started started rate hikes. They started raising interest rates afterwards, right? And mortgage business went from crazy strong to almost nothing within 6 to 8 months. You know, so business thrived for mortgages. Then they hiked rates and mortgages went up to 7-8%, right? And their business just shrunk. You know, mortgage brokers right now, I promise you, they're the ones pushing for rate cuts. They're the ones that want rate cuts. Why? Because it's much easier to sell mortgages when interest rates are 2.5%. versus 8%, 7%, which they are now. The reason they want rate cuts is very clear. You know, that's like plumbers saying they want more toilet problems. You know, why? Because it benefits their business. You know, right, we're not in a recession because the definition of a recession does not describe our current reality. 100%, right? Just because things are bad does not mean we're in a recession. Right, but the economy sucks right now because prices are too high, which is the opposite of a recession. Again, a lot of people get really biased and they start arguing about recessions, but they don't really know what a recession is. They just end up saying things are bad, but those things don't have much to do with an actual recession, right? So it's important for people to understand a recession is a very specific definition. It's 2 consecutive losing GDP quarters. Recently they've added low unemployment or high unemployment, but take that out of it. It's 2 consecutive losing GDP quarters, which we're certainly not in right now, right? And really the reason the Fed's keeping interest rates high is to discourage spending, push the economy down a little bit. They want a looser economy because of it. Yeah, so if you look at this, right, so home prices can be influenced by a lot of different ways. I'm going to detail exactly how interest rates affect home prices, right? So the cost of borrowing, higher mortgage rates signal this. When interest rates are high, mortgage rates typically increase, of course. This means the cost of borrowing money to buy a home becomes more expensive. Higher mortgage rates results in higher monthly payments for home buyers, and as a result, potential buyers may find it more difficult to afford homes at current prices, leading to reduced demand. As borrowing costs rise, fewer people are able to buy homes, leading to a decrease in demand, and this can put downward pressure on home prices, which again, I would argue is necessary right now. Like, we want downward pressure on home prices. We want prices to drop. And it's the opposite with low rates, right? The reason you see banks, mortgages, real estate people all pushing for lower rates is because lower mortgage rates make borrowing cheaper for home buyers, result in lower monthly payments, allowing more people to afford higher priced homes. This can increase the demand for homes. Again, the problem in increased competition among buyers leads to bidding wars, pushing up home prices, right? And so the problem is that that's not always a good thing. Again, everybody wants affordable homes, and that's great. The problem with affordable homes is that it spikes the price of homes up, without question. And the issue there is that prices are up too much. It's not always the perfect time to buy a house. And we need periods of time in which the market corrects a little bit in that way, through high interest rates, through less people buying a home. Because if we don't have those periods, things are going to go up to unsustainable levels in terms of inflation. And that's the real reason people are unhappy, and they've been unhappy, is because prices are simply way too high. Without that, if prices continue to spike, people are going to be more unhappy, not less. Yeah, and again, in general, higher interest rates tend to lower home prices, which is good. But again, with that said, I'm not saying things are perfect. I'm not saying things are great. The real reason people are unhappy is high prices, right? And that's not a good thing. Inflation is the worst thing right now. Yeah, but that was 4 years ago, CWC, right? So again, people argue like these buzzwords that news channels throw out there. But again, I'm telling you, currently we are not in a recession. I'm not saying things are good. I'm not saying things are perfect. I'm not saying things are all rosy and fine. Things are not good right now, I would argue, right? But just because things are not good doesn't equal recession, I guess is the point I'm trying to make it. But it's all good. It's a good conversation for people to hear at home. The issue is that even though they might cut rates, the majority of these buyers now are corporations and large asset managers who are buying them up and converting them into rentals. Sure, that makes sense. Does this news affect Bitcoin? Probably to a certain extent, sure. Where's Bitcoin at? Is Bitcoin still rising? Yeah, Bitcoin at 64. We still got 7+ minutes left until this data drops. 7 minutes. Where did you get the data? A couple different sources. TOS, MarketWatch. Core retail sales expected at 0.1%. Regular retail sales expected at anywhere between 0.2 and 0.3%. So it just depends on which one you're looking at. All right, so core retail sales, probably the more important metric. It's more closely watched by economists and policymakers. It offers a clear picture of the underlying strength of consumer spending, filtering out the noise from volatile sectors such as automobiles, gasoline, building materials, and food services. And so core retail sales is probably the more important one. That is actually expected at 0.1% for core, so 0.1%. So we'll put this up on screen. All right, so we'll put that up. Core is expected at 0.1% positive. Regular retail sales are expected at minus 0.2%. Here we go. We'll put this up on screen. We got 5 minutes roughly, chat. 5 minutes. We did have some earnings today. Put this up on screen. Also, hit the live button next to the play button. We got about 600 people here. Morgan Stanley had earnings. What else? Bank of America, Morgan Stanley, United Health, Progressive. Schwab, State Street, PNC. All right, guys, a couple minutes left. Yeah, I mean, I use T-bills too. Yeah, trading economics is good. Yeah, all good, CWC. Good conversation, better. People trying to bring the heat. No, it's all good, bro. Again, I understand. This is actually a very common thesis, is that, hey, things are not good right now, we must be in a recession, right? But again, it comes from a lack of understanding about what a recession actually is and what it means. Again, I'm not saying things are great is the biggest thing I'm trying to teach people, right? I'm not saying things are perfect right now, because they're certainly not good. Prices are obscenely high, right? But when people are arguing for rate cuts because they think we're in a recession, they're actually arguing for more poison in that way. Does that make sense? They're actually arguing for more, for reducing rates causes higher prices. And so when people argue for rate cuts because things aren't good right now and people are having to work multiple jobs, they're arguing for things that are going to make that situation worse. What's going to make that situation better is keeping interest rates high for as long as we can and really curbing that inflation down, because prices don't go down after they go up almost ever. So once prices go up, we're stuck with them. And so we can't cut rates just to pander to people and spike prices again. It's just not going to be good for everybody. But it's all love. It's all good. I like the conversations. All right, guys, we got 2 minutes. 2 minutes. Bitcoin surging up. GameStop breaking highs as well. Gold has been breaking highs all morning. Look at gold up there at 2450s. SPY is at 562s. Yeah, well, that's good. All right, guys, we got about a minute and a half left. I'm going to put it in sub-only mode, so if you haven't already, hit the subscribe button. I appreciate it. We got about 700 people here live. Retail sales release. No, I'm pretty sure Apex is back up. At least Tradeabate's back up, right? All right, guys, we got about a minute. It doesn't matter if you study economic data for since 70s average worker can afford 5 times less good with the same work than 50 years ago. Right, exactly. But what do you think the problem is there? The problem is inflation. Prices going up too much. What do you think combats inflation? High interest rates. GameStop just broke highs right before this release. Here we go, though, guys. We are about to put this number down. Core retail sales expected at 0.1%. Regular retail sales expected at minus 0.2%. We also have Canadian CPI dropping same time as well. So, yeah, here we go. $20 seconds, chat. 20 seconds. All right, and 5 seconds. This is a little bit early, so we actually have a little bit of time left. Here we go. There's the SPY gold, and here's the report right here. All right, so retail sales showed up at 0%. 0% for retail sales. Core retail sales showed up at 0.4%. All of this showed stronger retail sales data than expected, more economic growth. And again, this signals less of a need to cut rates. Less of a need to cut rates, more economic growth, higher than expected retail sales. Again, not the looming signs of a recession, guys. This signals less of a need to cut rates, more of a need to keep interest rates high, stronger economy, higher retail sales data universally. Yeah, it's important. Also, Canadian CPI showed up lower than expected as well. So yeah, this is less signs of a rate cut, or less signs of an inflation, more signs that we need to keep interest rates high. Retail sales showed up at a positive versus a negative expectation. Core retail sales showed up at 0.4% versus 0.1% expected. Again, these are very strong signs here for the economy. We certainly do not need to cut interest rates. Yeah, again, core retail sales showed up at 0.4% versus 0.1%. Here's the retail sales release. Markets like this as well. Again, the S&P ripped up, the SPY ripped up. New definition, guys. It wasn't matching with my bias. Yeah, again, the real problem, Blaze, is political bias, right? Like, so if you want to believe the current administration is just doing the worst they could ever be, what are you going to say? You're going to say, oh, we're in a recession right now, obviously, right? And again, I'm not picking sides politically. I'm very neutral politically. I dislike all of them, right? I don't like any politician. But just because things are not good does not mean we're in a recession, you know? And there's a difference there. You can't just, like, again, that's the root of the problem. It's just political bias mostly, right? But we got to look at the actual definitions of these things and not just kind of blindly say it to make somebody look bad, you know? That's the real issue, I think. Anyways, the S&P 500 sitting right around, the E-mini sitting right around 5690s here for the E-mini. The actual S&P, yeah, around 5690s. Yeah, again, the market reacting favorably to the, again, I'm going to put the NASDAQ up here, to the higher retail sales data. Retail sales showed strength in the economy. And the market mostly reacted positively. I wonder if we're in a good is good scenario now. I think with rate cuts looming, that's probably what we're in, where economic growth is going to be seen as a positive thing. All right, so we're finally pulling back a little bit. But again, the NASDAQ's up. NASDAQ's up a little bit today. All right, guys. GameStop. Yeah, GameStop up to almost 2750s, right around 2750s now. Tesla maintaining strength. Yeah, Tesla's still gapping up today. It pulled back yesterday at the close, but it's still moving up. NASDAQ just broke highs here, chat. Economic growth plus interest rates down equals soft landing. I mean, maybe, yeah. I mean, it just depends. I don't think we should cut interest rates, but we're almost certainly going to cut next in September. All right, guys. Again, if you haven't already, check out Apex. If you want to day trade with me, we are basically flat on the day, but Apex gives you a demo, and they test your skill with the demo account. If you can pass the test with the demo, they fund you with a regular account. The base one is $25K, so if you pass it, you get $25K in funding with a 90% split. If you lose, you're only out $35 is what you pay for it if you use my coupon code and link. And again, almost all day traders lose money. Doesn't matter where you go, what course you take, who your mentor is, almost all day traders lose. And so instead of risking your own money, try this first. It's a great way to learn how to day trade. It's going to cost about the same as a regular demo account. If you were going to buy a demo account with real-time data, it's going to cost about the same. This is $35 a month. They give you a 25K demo. If you can make $1,500 in profit without losing $1,500 first and following their rules, they fund you $25K with a 90% split. And so if you make $10K, you keep 9 of that. You also get to keep your first $25K in profit. But if you lose, you're only out $35. It's not the end of the world. You could also get the $150K, $250K, and $300K for the same price, where you get hundreds of thousands in funding with a 90% split. And it's kind of the best of both worlds. Limited risk. If you lose, you're out $35 a month. And most day traders lose. But if you pass it, you get tons of funding, 90% split, similar to putting the money up yourself. And again, they pay out hundreds of millions of dollars. They paid out over $200 million to their traders since 2022, average of almost $13 million since January of 2023 in payouts. So a great way to learn how to day trade with limited risk. You still have some pressure, but not the full extent of risking thousands like most people do. I lost thousands when I first got started, so this is something I wish I had in the beginning. But again, if you want to check them out, here's the link. Use coupon code BT, beginner trading. It'll get you the max discount. They're a sponsor of mine, though. They pay me money, so I'm biased for sure in their favor. Check everything out with them. Vet them yourself. Great way to learn how to day trade, in my opinion. But again, they pay me money, so of course I'm biased. I do trade off stream. You're not going to see all my trades. I'm not even claiming to be a good trader, chat. Not an investment professional. Not even claiming to be good. Do your own research. Understand CFTC 4.41. All that good stuff. Next year for first cut until here at JP yesterday. Yeah, Hims. Hims is an interesting company. Hims at 23.20s. Yeah, John Blassingham, he's just been saying the worst things ever. It's actually really funny when you look at his comments, though. So, let's take a look at his history of comments here. And again, I think most day traders lose. There's obvious recession because prices of stuff is high, bro. John B. Let's see what else he said. I'm going to create a course because I still don't agree about inflation being money printing, because honestly, money has nothing to do with inflation, because inflation is just people charging more. End quote, John Blassingham. A scholar of our times, guys. All right, guys, market's starting to pull back a little bit. Again, sometimes the first move is the wrong move. Is it time to short? I don't know yet. Gold is starting to dip all the way back down. Look at gold come down to 24.30s, chat. But I saw it on a YouTube video, bro. Yeah, John's big argument was that what was his argument? It was that, it was that money printing did not cause inflation, right? Was his big argument. which is economics 101, you know. Money printing, reducing interest rates, quantitative easing. These are all going to stimulate spending and cause inflation, because more spending equals more inflation. Just to give you guys the economics lesson in this, if there is one. The more people that spend, the more businesses raise prices. If I put out 100 pieces of bubble gum in my store, and by noon all that bubble gum is sold, what am I going to do? I might bump the price up from 25 cents to 35 cents, thus inflating the price of bubble gum. Inflation has occurred. Because of that, more spending equals more inflation. That's one of the most natural economic correlations. Bro, I like you doing everyday stream on YouTube for news. I made $4.75 today and a quick scalp. Hey, congrats, Frequency. Nice, bro. Yep, money has nothing to do with inflation. You know, the scholar of our times, guys. All right, so we're pulling back. We're kind of flat from all this stuff, though. We're kind of neutral here. We haven't really done much. Talk about the pound US dollar. I'm not really a big futures or forex trader, brother. I don't even know how I would even trade that. What is the pound US dollar symbol move? What does it mirror in futures, chat? A lot of forex traders should be trading futures instead. Futures market, there's no PDT rule. You can day trade short, buy market, sell market. Very similar to day trading stocks. You can day trade gold. You can day trade the S&P. You can day trade the NASDAQ. You can day trade some currencies on some platforms. And so it's very similar to day trading stocks or forex. There's just no PDT rule, and there's less red tape in futures. Again, check out Apex or Top Step if you want, you know, a good futures prop firm. But John is your Jim Cramer, John. Jim is your John Cramer, Jim. No. You forget one important thing here about not cutting rates, America's debt. I mean, what do you think I missed, Roger? It's all good, brother. We can talk about it. 6E. Oh, Euro FX futures. Yeah. So this looks like it moves kind of with the S&P. Why did you not set limit orders before the 8:30 news, John? Because I can't really day trade news events anyway. Look at this big spike. So we are spiking back up here. The S&P back up to the highs. Yeah, all good. Frostbite, you're good, brother. Day trading futures on micro scale is not good for every market. NASDAQ is best by far. Yeah, I mean, it depends, right? Most day traders lose. I always tell people the truth, right? Almost all day traders lose. Day traders seem to have this weird misconception that they're going to get started and that they're going to be some type of prodigy savant day trader and show their family how smart they are, and that they're going to take 5K and they're going to turn it into 50K. And then their family's going to be like, dang, man, look at this guy. This guy's so smart. Look how smart they are. And then they're just going to be rich and ride off into the sunset. Every day trader's dream. You know, again, I'm here to tell you that is not happening at all, right? That's never going to happen. You know, I hate to say it, but it's just not going to happen, right? It's much more likely that you're going to put up that 5K, lose, sit on the corner and cry a little bit, you know, and that's it. The story of your trading career. I feel like if I do serve a purpose here on YouTube, is to be honest with people, and that's the truth. Only way to afford a home now is 40 years versus 30 years. I mean, that's not true. Again, you got to understand, right? Like, what your problem might not be everybody's problem, you know? And so people make different amounts of money. They have different, like, assets, different things. Like right now, it's not the time to buy a house, chat. It's simply not the time to buy a house. With high interest rates, super expensive mortgages, it's just not the time to buy a house right now. At least it's not the time to get a mortgage. It might actually be time to buy cash property, but it's definitely not the time to get a mortgage right now. I don't care what your mortgage broker says, what your real estate agent says. The conventional appeal of buying a home is that, you know, you could pay less than you would in rent and actually own the home through getting a mortgage. That is no longer true anymore. You're going to pay much more money in a mortgage than you are in rent right now. And so the conventional appeal of getting a mortgage is not there right now. You know, it's simply not there. And again, it's not supposed to be there right now. We need contractions in those markets to come back down to earth a little bit. We want house prices to drop. And so, you know, cutting rates just to try to help them in that very niche scenario is not the right move. Like, if you want prices to drop, rates have to be high. That's so true what you said about day traders. I mean, it's not everybody. It was me when I first got started. I thought I was going to take day trading and take 5K and turn it into 20K. And my wife was going to be like, wow, John, you did it. You did it. Look how smart you are. She's going to tell her family, be like, dang, John's making all this money day trading. And the family's going to be like, whoa, wow, you did it. You know, the truth is more so that you get started, you lose all this money, you feel bad, maybe you gamble more, you lose that, you go sit in the corner, cry, realize that you're just losing money, and then go do something else, right? I'm here to tell you the truth. That's the truth. I'll turn your 401k into a 201k. What about a 101k? Your truth is very general. I know, listen, it's definitely general. I'm generalizing everything. I'm joking, obviously. It was my truth when I got started. I remember, listen, I've told this story before, I'll say it again. I got started. I went and saw the movie The Big Short, right? Came home from watching that movie, researched day trading. Tim Sykes popped up, financial freedom. You know, millionaire students, I'm building schools overseas, blah, 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 right? And so I thought I was about to get rich. I thought I was about to put up a couple grand. You know, Carol was like, hey, John, don't do it. I had a couple $1,000s, which was a lot to me at the time. It was all my savings. I thought I was going to get rich. Carol was like, hey, baby, don't do it. You know, I did it anyway. Day traded for like 3 weeks. Lost all of it. You know, almost cried. Like, genuinely almost cried. Took like a year break, you know, came back, had better risk management. Honestly, it was meant to be though, because me getting started in day trading and losing all that money started this YouTube channel. Like I day traded on a overseas brokerage called Sure Trader at the time. They gave me 6-to-1 crazy amounts of leverage. I would day trade. I would upload the videos to YouTube, and lost the whole account. You know, and again, I've said this story, but I stopped trading and uploading for like a year. Right, but during that period of time when I stopped uploading, I was looking at my subscriber count, and my subscriber count would slowly grow. I would look at it one day, it would be like, you got 75 subscribers. I would look at it a week later, I would have 100 subscribers. I'd look at it, a few weeks later, I'd have, 200 subscribers. I'd look at it. Eventually, I had like 400 or 500 subs when I came back, and I was like, hey, let me give this another shot. I got some fans out here on the internet. Like, let me give this another shot. I did, and now, years and years later, we've got our gold, where we've got our play button. We've got over 100,000, and we got over 10 million views. So honestly, it was for the best. But most people are not going to be able to like have this happen. But now it's definitely a bad time to buy a house. Yeah, I mean, it's definitely not a good time to buy a house right now unless you're paying cash. Cash might be good, but that's arguable. It takes 5+ years. Yeah. I mean, it just takes time, you know. What I realize, like, some truths about trading in general for me are really, like, you could day trade. Like, I could day trade, but I'm not restricting myself to just one. Like, I will day trade, swing trade, and invest, and do all of those things depending on what opportunities present themselves in the market. And I think that's what a lot of people miss out on. I think a lot of people are just trying to sell day trading content, right? So they're acting like you could just get started and day trade every day and make all this money. And again, most of them are marketing rich. They're not day trading rich, you know. And so most of them are making lots of money from marketing specifically, not day trading themselves. So it's, you know, it's a tough market. Yeah, it depends. Mathematically and statistically, you are better off than hedge funds if you invest every month into the S&P. 100%. You DCA into the S&P, the NASDAQ, the Dow. You're going to make money long term. Yeah, for sure, Andre. Hey, what's up, David? Same thing to me. I lost 5K. Losing accounts is part of the process. 100%, man. Yeah, if you try to post your affiliate link or code here, you're going to get booted out of here so fast. Interactive brokers. Yeah. And again, I make money from YouTube. I'm very transparent about it. Like, I'm here to make money. Like, I'm not spending hours and hours of my day here. I mean, I would do it probably regardless, but I certainly wouldn't live stream it. There's an added stress that comes with live streaming anything. People on the internet are weird, jealous, bitter, insecure, you know. And so if I had the option, I would do the same thing I'm doing now. I just wouldn't live stream it. But I make money doing it, so I'm about to live stream. 15-year-old in his Lambo. Yeah, the data's already out. It might be in big letters right here. It came in at 0% versus minus 0.3% expected. Core retail sales showed up at 0.4% versus 0.1% expected. So. No, not you, whoever, yeah. Yeah, most day traders lose money, and that's the first thing people got to accept. The problem is it's so easy to pull day traders in different directions. But again, most day traders lose. Most of the people that are out here day trading on YouTube, they're making more money marketing than they are day trading. We got a bunch of different sources, frequencies, so we use like Market Watch. We use a bunch of different sources. Buy any dips? No, I don't think you should buy any dips. Right now, I'm skeptical in markets. I kind of want to short, but I also think if we stay in a choppy range, we might go right back up. We are at the bottom range. Maybe I should buy this. All right. I mean, I like Rolexes, Martin, you know, but I also think that, like, I like Rolexes, but I'm not claiming to buy my stuff from trading, you know, or anything like that. I think Rolexes are a good historical investment, and so, like, I think Rolexes are cool because you could buy a Rolex, wear it for 5 years, and then most likely sell it for more than you paid for it, right? So, like, you could essentially wear a really nice watch, and then profit from it over time. And that's what a lot of people don't realize about Rolex is like, it's kind of something that people with money understand a little bit better, but Rolexes keep up with inflation. You know, if you look at it like watch prices, right? And again, I don't ever wear mine, so I don't really wear one. I invest in them and I keep them in safety deposit boxes. But Rolex typically keep up with inflation, you know, a pretty good amount at least. Like, look, I think I have premium. Do I? Yeah, I do. All right, let me log in. Yeah. So Rolex prices have gone down a lot too. But like, look, here is a long-term chart since 2017 Rolex prices. Honestly, and for me personally, right? So here's Rolex prices just like in terms of like a index, right? So here's Rolex prices, right? Rolex prices have gone up dramatically since 2017, you know? And again, it's very similar to other markets where, you know, you get a big upward move, a pullback, a big upward move, a pullback, a big upward move. And so Rolex prices generally keep up with inflation. I'm not claiming they will or going to, but in general they will. And again, for me right now, it's time to buy them. You know, we have this big, deep pullback over the past, 4 years since 2020. What happened here, and again, I've told people this correlation before, is that 2020, the Fed brought interest rates down. If you want to see the correlation with stuff like this as well, right? In 2020, let me make sure you guys can see this chart. In 2020, the Fed brought interest rates down to almost zero. This stimulated spending. People had more money to spend. The Fed also, or the government also sent out stimulus checks. This all caused Rolex prices to freaking spike, right? Rolex prices went up dramatically from this increased spending. And so Rolex prices doubled. You can see they went from 16K to freaking 30, Then inflation got out of control. The Fed started taking a more quantitative tightening, more restrictive monetary policy approach. They're trying to keep interest rates high, discourage spending. And so what happens? Rolex prices come back down to earth a little bit. The real question here is when the Fed cuts rates again, is this going to benefit Rolex prices again? And again, it's certainly not as predictable and definitive as something like the S&P or the NASDAQ or anything like that. But it's certainly an interesting chart, I would argue. Because again, Rolex prices historically do keep up with inflation. Again, here's 2017. So most of them have doubled in price since 2017. Jewelry's a different thing, right? Like buying, you're going to lose money with jewelry outside of watches. And you're probably going to lose money with watches too. It depends on which kind. GameStop's starting to spike here, chat. It really just depends on which type of jewelry you're talking about. Rolex specifically, and maybe like AP, Rolex prices, APs, some Omegas. Omegas mostly lose value though, but they're not terrible. But like if you want to buy a watch as an investment, I'm not saying you're gonna make money. Not recommending anything. The watches historically that appreciated are Rolex prices that have nicknames. Rolex watches that have nicknames, right? So you got like Bluesy, the Batman, you got Batgirl, you've got Dark Knight, you've got the Hulk, Starbucks, Pepsi, Coke. There's all these different nicknames for Rolex watches. The rule of thumb is that if it has a nickname, it's a famous Rolex watch that will probably appreciate over time. Anyways, GameStop spiking up almost over $28 a share. Yeah, Patek Philippe's, APs, and Rolexes are basically the big three that you probably, like if you want to watch that has a good chance of appreciating, if you buy the right ones, you got a good shot, But again, Omegas are cool too. I like Omegas, but Omegas don't hold their value nearly as well as Rolexes do, unfortunately. Yeah, sure. I mean, most watches aren't good, but again, it depends on which watch, right? If it has a nickname, it's different, GameStop spiking up to 28s. Yeah, what are your favorite watches? List those in chat. I'm a watch guy. I like watches. Is this data positive or negative for the market? It depends. Cartier and Movado, they have value, but they're not going to appreciate like what we're looking at, Faye, is what we're looking at, Faye, is the resale value, right? So like an example of this is like if I buy a Rolex, right, from what's called an AD, an authorized dealer, right? If I buy a Rolex from Rolex themselves or somebody that's authorized to sell Rolexes, right? If I buy the right watch, I can immediately take that watch that I get from Rolex for like 12 or 13K and immediately sell it for 18, 19, 20K. And there's people that live off of doing this. They form relationships with ADs. They get these nice, super desired watches, and then they immediately resell them and profit 30-40% on the watch, right? This happens all the time. This is how Rolex people make money. This is how people flip watches and make a living off of it. They make hundreds of thousands of dollars a year doing this. The problem is forming a good relationship with an actual AD is very difficult, right? But with that in mind, going back to what I originally said, Movado doesn't have that type of resale value. You know, Cartier doesn't have that resale value. Omega doesn't really have that resale value. Breitling doesn't either. None of these watches really have that type of resale value. And it's really a strategic thing from Rolex themselves, right? Rolex knows people are doing this, and they do it intentionally to push the value higher. Breitlings are cool. I mean, they're pilots' watches, right? But I'm just looking at specifically retail value, which is a different animal. What's a different thing? All right, so we're very sideways here. I might start shorting this market, to be honest. I'm a little bit late. I was getting ready to short. GameStop surging up, though. Man, I wanted to short this market. Watching gold here as well. Anything else moving? Like, what's Apple, Tesla, Amazon doing? Tesla's still up. Amazon is still green. Amazon's doing really well. Meta's pretty slow today. Google's still trying. I wanted to short up here. I just missed it. It's all right. Cashier GSOC. Izzy or Dricus? Or Dricus? Is it? Wait, who is it? I think it's Dricus. Yeah, I mean, I don't know, man. I think Dricus and Izzy is gonna be a good fight. I'm gonna say Izzy. I think Izzy's gonna beat Dricus, to be completely honest. I think Izzy's got much better hands. Has really good takedown defense. I don't think Dricus is gonna be able to take down Izzy as easy as he wants to, and I think he's gonna get pieced up on the feet. All right, so we're at the bottom range. I would buy this up, but I'm also kind of bearish short term too. I don't know what we're gonna get. Can't anybody walk? Yeah, you can't walk into a Rolex store and buy the watch, unfortunately, right? Like, you're not going to be able to walk into a Rolex and get a watch. This is the biggest misconception people have, right? A lot of people think if you have enough money, you can walk into a Rolex store and buy a Rolex. That's not happening, you know? You walk into a Rolex store, they're going to take your number, and then they're going to call you if they get anything, and then they'll never call you for 6 months, is what it was. You know? So you're going to have to form multiple different relationships with multiple different dealers and then see how that goes, right? Like, that's how most people do it. Yeah, 100% Faye. I agree. Yeah, Movados are nice. I've got some Movados too. Movados are cool. I don't have any Cartiers, but, you know, Movados are nice watches. My first nice watch was a Movado. And I argue, like, nice is subjective, of course, but, like, I thought they were nice at the time. So I like Movados a lot. G-Shocks are like the Crocs of the watch industry. Yeah, G-Shocks are cool. You know, my son got one recently. No, I don't even know how to say that, Sam. I'm always hesitant to say names I don't know. Because there's too many people trying to trip me up and say curse words or something, you know? You're talking about the old ancient Greek original watch from Greece. See, we're at the bottom of the range, but I'm really skeptical. The whole market's very slow right now, chat. Like, the whole market's very boring, very slow. Nothing's really going on here. We got almost 143,000 subs, chat. Earnings season's here, too. I'm ready. I'm never sarcastic. Yeah, it's all good. Yeah, the next watch I'm going to get is probably an Omega, I think, right? Like, I've been researching it. I might get a Speedmaster, is what I'm looking at. All right, so AMC GameStop's starting to run a little bit. Let's see if we got number 2. Let's see if we get swing number 2 this week for GameStop. Yeah, so where you buy Schwab? Nice drop. How big is the drop? I like buying pullbacks, and they did have a nice pullback too. It's not big enough for me to really want to buy, so they're at 69s. I mean, it's not a bad dip for Schwab for sure, and it is pulling back to a support level. I'll try it. I guess I could try to buy it. Yeah, we'll try. I'll show you guys a little swing trade. Again, it's we bought 25 shares. We'll see if it works. GameStop's still pumping up. Yeah, so again, retail sales are out. Banks are out with their numbers. All right. Yeah, so again, we're covering retail sales. We got Bank of America earnings. Bank of America released some stuff. All right. All right. Yeah, I'm trying to see anything else that we got. I don't know. Yeah, Bank of America. We got 20 minutes left if the market opens. We bought a little bit of Schwab. We'll see if it works. I usually like buying these earnings dips, but if we can't back up soon, then I'm not gonna hold it either. All right. Yeah, for sure, coins. So if you resell it, they're not. If you tell them you're gonna resell it, they're not gonna sell it to you. So they don't sell it to resellers at all, ever. So if you tell them that's what you're doing, they're not gonna. Yeah, somebody asking about the Home Builder Confidence Index. It's not big at all. It's pretty much irrelevant. Anyone know why the market is so flat today? I think we had a lot of economic reports, Powell meetings. So I think the whole market's kind of just quiet. They don't know what to do yet. They're just kind of sitting tight. I think the whole market's indecisive and flat. Is Trade Evade back up today? Yeah, so Trade Evade seems to be working well. So yeah, Trade Evade's back up, it looks like. Yeah, cool. Yeah, we bought a little bit of Schwab. I guess I could probably add a little bit more to this here. I'm not going to take too much. 50 shares. We'll buy a little piece. Good, so Apex deleted any red trades from yesterday. Back up, cool. Yeah, so the FOMC meeting's on the 31st of this month, so we still got about 2 weeks exactly until the FOMC decision. I don't think it's going to be a cut. I think the cut's going to come in September. But when do you guys think they're going to cut rates? Yeah, when do you guys think they're going to cut rates? All right, so we're starting to bounce up a little bit. I don't know if it's going to hold. GameStop finally dipped down. Let's see if we run again at the opening bell for GameStop. We'll see. We're basically flat on Schwab. We bought 50 shares. We're just kind of playing around. You know, they have the dog that goes and retrieves bats. There's this really heartwarming video of a dad admiring a car he sees parked in a restaurant parking lot. It reminds him of his old car that he had to sell to help raise his kids. He's reminiscing and telling stories about the car he used to have. And then his daughter hands him the keys of the car and says, hey, we bought this for you. It looks like it's an old vet. Stingray is what it looks like to me. Green. It's pretty. You know, those old Stingray vets are cool. I like the new vets, but I see too many of them now, to be honest. The new vets are cool. And they're cheap, right? For like $80K. I mean, cheap is relative, but $80K for, you know, a supercar looking car is pretty nice. But again, the real problem is there's too many of them out there. They're not as cool. If everybody has one, they're not cool. November, October, September, December. That's when people think they're going to cut rates. So the retail sales numbers are good or bad for inflation. For inflation specifically, they're bad, right? So the retail sales numbers are worse because they signal more economic growth, signaling more inflation problems, right? But this also signals less of a need to cut rates, you know? So like what if the economy's if the economy's strong, the biggest reason people will argue we need to cut rates is because the economy is struggling. You know, we have recession signals, right? But when retail sales show up stronger than expected, core retail sales show up stronger than expected, you know, unemployment's still relatively low, payroll numbers are high, the JOLTS report was higher than expected, you know, all of these things do not signal a recession. Most of these things signal the opposite of a recession, a stronger economy than expected. And so that signals less of a need to cut rates, not more of a need. Porsche GT3, those things are too expensive for what they are. I like them. I love Porsches. But those are so expensive, bro. You know, they start at $200K. You know. Yeah, they start at $200K. It's too expensive. If I'm spending $200K, I'm going to get like a freaking Lamborghini or something. I'm going to get like a McLaren, realistically. McLarens are cool. I always wondered why a car company can't just make a supercar body and add an economy engine. It's a product I would buy. I just want a car that looks cool but will last. Well, they've done that before. Like what we see a lot. I'm going to probably have to cut this trade. It looks like I'm down on it. We have seen that a lot, specifically in like, they had that Saturn car. Right? They had that Saturn car that looked like, you know, I know a lot of people when I was young, right? When I was a teenager, they would get this freaking ugly car. They would get this car and they would drive it around like they were hot stuff, you know, when really it wasn't like this car right here. And so I know a lot of people that would buy this car and they would drive it around like they were hot stuff because it looks like a supercar, right? It's not. It's a freaking Saturn, one of the worst automobile makers in the world, right? But again, it looked like a sports car. It looked like a supercar. And so they've done this a lot, actually, where they take regular cars and, you know. But the problem is, like, most people, if it's a supercar that can't back it up, like if it's a supercar that's slow, car people are not going to want it. Like, it has to be at least somewhat like a supercar. Like, supercar doesn't just mean how it looks, you know. kit cars, yeah. BYD sports car. Now this thing looks pretty cool though. I'll give this thing credit. Whatever this thing is, this thing looks like nice. Like it's kind of like the RSX, right? The Acura RSX. For those that don't understand, this is what we're referencing here. I might pay $200K for this thing, especially if it's fast. The car in question is this, chat. Look at that. That's nice. I like it. You know, it's got to look like this though. Miata. Yeah, Miatas are too small. I love Miatas though. I always liked them as a kid, but they're too small for me. Yeah, the original Acura NSX was like a dream car of mine. I always wanted a Acura NSX. I always wanted a twin turbo Z, a twin turbo Supra, an NSX, you know. The new RSXs though, they have the new RSX supercars. Like look. Here's the new RSX supercars. Or no, the new NSX supercars. I mean, not RSX, NSX. Sorry. So yeah, Acura put out an NSX. Like the new ones are really cool. They kind of look like McLarens is what they look like. They're not as fast though, unfortunately. Like I need more speed. Yeah, like this is the new NSXs. Schwab, guys. So we're still in Schwab. We were down $30 at one point. We've since bounced all the way back up. I'm hoping we found a bottom here. It's almost like a double bottom. We're also looking at GameStop. GameStop now at $28 a share. AMC has been surging up too. And so we're getting ready to day trade. We're mostly flat on the day here. We're in AMC and GameStop. Trying to hold. AMC's up to 540s. Those are legit. Yeah, no, they're legit. They're not as fast as I would want them to be, but they're pretty cool. Yeah, they're Acura. It's Acura, Honda, same thing. You know, overseas, they're going to be Hondas. All right, and Schwab, we're still pretty flat here. Chat, we're still sideways, neutral, not really doing much. Again, I'm going to give Schwab a chance to bounce back. It's a little bit slower today, I think. Whole market's basically choppy and flat. I'll take a risk and short the top up here. See if we get a little dip. There we go. I can probably hold this now too. Let me see. What am I up or down on the day? I think I'm flat. Yeah, I'm flat. Yeah, we're basically neutral on the day currently, chat. Yeah, the LC500 is nice. And it's a Lexus too, so it's a Toyota. They're cool. I like them, you know. So it's a V8. What's the quarter mile time? 13.2 seconds is actually pretty slow, to be completely honest. It runs a 13.3. Not fast enough, to be completely honest. Just not even close. Like 13-second quarter mile is way too slow for a V8 sports car right now. I'm not trying to be like snooty with quarter mile times. I just think look, if it's marketing itself as some type of like world beater sports car, 13-second quarter mile is very slow. Very slow. 0 to 60 in what? What's the 0 to 60? All right, so we're up a little bit here. Yeah, 0 to 60 and 4.2 is a little bit better, but still, quarter mile time's pretty, just not fast enough, unfortunately. If I'm missing something here, maybe I am, but I need something faster than that. So we're starting to break down a little bit. We're up about $40 here. We're on contract at the NASDAQ. Just kind of shorting the top. We're at $50 now. We'll go ahead and take profit there. We're slightly green on the day now. After losing $140, we made it mostly back. We're now up about 20. We'll see how we go in this funded account program. Yeah, I mean, it's just not very fast. Right, any EV is going to smoke this Lexus right now is the problem. Right, and I think that's the reason. You want to know why most people are going to be getting EVs in the future, is because a freaking like a Tesla SUV will destroy your favorite sports car quarter mile. You know, like that's the crazy thing right now, is that a Tesla will do 11 seconds quarter mile, like a Tesla 4-door sedan will do 11 seconds right now. That's the problem. That's the innate problem. Here, I'm going to short the top again up here. We'll see if it works. But the problem is, like, a sedan EV will smoke your favorite sports car right now. And so if a sports car is not doing at least 12 seconds, I don't want it. You know, I genuinely don't want it. I need something that does better than that. I don't mean to be elitist, but yeah. All right, so we're short the top up here. We'll see if we get a pullback. Again, we're still in Schwab. We're down about $10. Still waiting for the open in 5 minutes. We pop up. That's okay. We're at the top of the range. Yeah, maybe. Proves that it ain't all be all. Well, it's not the end all be all for sure, but I don't care about sound. I mean, I always enjoyed racing cars. Like, I was always like a tuner person. Like, I grew up with the Fast and Furious movies. I was into tuner culture. I wanted, again, if you hear my favorite cars, like Toyota Supras, NSXs, you know, my friend had a Type R. Like, we had a bunch of really cool cars that you could soup up and fix up and do all this cool stuff with. The issue now is that an EV will destroy all of these. Like, you can get a stripped down Tesla that will destroy any of these cars, unfortunately. And that's the new landscape. And so if you don't evolve, you know, if I get a sports car, it needs to be able to at least compete with a sedan EV, right? Which means that it needs to at least do 11 seconds, quarter mile. You know, 13 seconds plus quarter mile is a turtle right now. All right, so we're going to cover this. We just cut this. Got out another little $50 gain here. We are up about $100, a little bit under $100 now. Yeah, I had a H22 5-speed Honda Prelude. My favorite car ever. You know, my favorite car that I ever owned ever, that is, when I was young at least. Yeah, I'm not political. We're not going to talk about it. I think it's terrible. I think it's horrible what they tried to do, and I hope he's safe. That's about all I'm going to say about it. You know, I'm not going to say if I agree or disagree with them. Don't think I need to. I'm not really interested in politics at all. All right, so now we're actually green on Schwab. I don't know if I want to take profit here or not. So we're slightly green in Schwab. I think I'm just going to let it ride a little bit, although we are approaching some major moving averages and stuff. We got the VWAP up there at 70. All right, so there's the NASDAQ pumping up ahead of the opening bell. Market opens up in a minute or so. It's not the ride, it's the rider. Oh, it's definitely the ride. Apex is back up now. What makes EV so quick? Electricity. My K20 EG hat supercharged hatch was a blast. Yeah, bro. Like I said, I had a lot of fun in those tuner days, man. Again, the problem now is that a sedan EV will destroy all of them. You know, like I thought my Prelude was fast. It ran like 15 seconds, 14 seconds, quarter mile. You know, the problem is now a EV is doing 11 seconds flat. Stock sedan EV2. All right, guys, here's the opening bell. Let's see what we get. Oh, there we go. All right, so we just took some profit on Schwab right at the opening bell. We got a big spike up. We took a little bit more off just to try to avoid the volatility of the open. But we got 15 shares left. Little day trade here. Took a little bit more off, just kind of locking in the profit here. I'm not going to hold through this. I'm just going to cut this, take my quick little gain, and ride out my little day trade. One of my favorite trades to get involved with. Ooh, we're up really nicely today. What are we up on? Nike, Treasury bills, GameStop. GameStop surging up to 28s. Maybe I should have stayed a little bit more here in Schwab, but that's all right. Yeah, torque in those EVs, man, are crazy. Yeah, for sure. Exactly, Sam. See, you and I are on the same thing. Like those torques, that instant torque, bro. Crazy in EVs, man. Immediate power to the gas, or not together, the gas to the pedal. Those things are crazy fast. So we're doing a lot better in some of these positions. Shopify really doing nice. I'll take a little bit more off of Shopify. Does Shopify pay dividends? No. So I don't think Shopify has divvies, huh? Big spike up here. GameStop up to 28.50s. It's trying to make a move. Wow. We're up really nice today. I'm trying to take some profit in some of these. I'll take a little bit off of Shopify. A lot of stuff's running. GameStop breaking highs again, Chad, up to 28.50s. It's starting to go. It's a good company with high dividends. I don't know, brother. PayPal were back green on it today. Palantir were red, but we took some profit on that one earlier, which is good, I guess. All right, I'm going to get out of my Netflix position here just because they have earnings. I don't really want to hold through it. We made a lot on that position. So we're going to go ahead and cut that. We're going to trim up some of our portfolio today, I think, heading into earnings season. We took some off of Shopify. Snapchat, we'll take a little bit off of Snap too. They have earnings coming out next week or so. GameStop pulling back to 28s. What else we got? We're in Target. Took some off a snap. Pfizer, MGM, Intel. I'm gonna trim a little bit from Intel also. Just trim some off there. Still an MU, we'll be okay there. Palantir. Uber. I think I need to cut some on Uber too. Actually, I think I'll hold Uber. Hey, later, Pawn. Or later, Sam. Why do you not have confidence in holding through earnings? It's just the way I trade, brother. It's just the way I trade. So usually I'm looking to take profit at tops, buy back at bottoms, kind of average in and out of these positions and limit my risk. So that's kind of what I do, is I kind of average in, average out. Gold is one that I'll probably take a little bit more off right now, to be honest. I'm going to take a little bit off of my gold position. There we go. What else do I want to limit? Just because I think the market might be heading towards the top. Delta. Delta's pushing up, so I'm going to go ahead and take some profit into that at the highs. We got a big dip. I'm probably going to start day trading some here. Took some off of Shopify. We're in PayPal, Palantir, Pfizer, Coca-Cola. I like Coca-Cola. Honeywell. Home Depot is up a lot. Where's Home Depot at right now, though? Yeah, Home Depot. I'm gonna take a little bit more off here too. Just lock some profit in. Google pushing up nicely. I'm in Google. It looks good. Hey, bud. Love you, buddy. You alright, man? Love you, buddy. Here. All right, guys, I'm back. My equities portfolio is pushing up. Market's topped out. Yeah, I mean, I just think we've gone up so much. So, yeah, I'm just hesitant, you know. We're in Ford as well. Ford, I'm going to take a little bit off of Ford. Yeah, I'm just kind of limiting my portfolio. If we get some good extension on earnings, I'll buy back probably. We'll start day trading a little bit here, but we'll short this. And just get punished, I guess. See if we retrace. Nope. We made $300, $400 yesterday. I just can't hold through this. We break this top, I gotta cut it. Yep. Well, we're out. We're down about 120 bucks on the day. It's just not a good day right now, I think, the day trade. I'm going to just go ahead and close it down. And so, again, if you haven't checked out Apex, Apex gives you a demo. They test your skill with the demo account first. If you pass the test with the demo, they fund you with a regular account between 25K up to 300K with a 90% split. Most day traders lose. I think that's probably the same here as well. It doesn't matter where you go. Most day traders lose, but it's a lot cheaper to lose here than it is to risk thousands of dollars of your own money. And again, here's the base one. You got to make $1,500 in profit without losing $1,500 first. Comes with real-time data. It's 35 bucks a month. And if you were going to pay for data yourself, it's going to cost about the same. So the value is there. But if you pass this test, you get 25K in funding with a 90% split. If you pass this one, you get 300K in funding with a 90% split. And this 300K, 250K, and 150K is the same price. It's 35 bucks. They pay out millions. In the futures market, you can day trade the S&P, the NASDAQ, very similar to day trading stocks. You can see they paid out over $230 million to their traders, and it's just a great way to learn how to day trade with limited risk. Go back to what I said earlier. Almost all day traders lose. So if you want to check them out, here's the link. Use coupon code BT. We'll get you the max discount at all times. BT Beginner Trading, max discount. And understand they're a sponsor of mine. They pay me money, so I'm biased, of course. Yeah, I don't know if it's a good day trading day for me. We're up a lot in equities, though. We're up hundreds in equities, so I'll take it. Y'all be good. I love you all. Understand CFTC 4.41. And, yeah, we'll be back tomorrow bright and early. I'll see you guys later.